So 2023 has been crazy. Yes, be insane, but buckle up guys, cause 2024 will escalate things even further. And let's recap the year. In geopolitics, we are seeing the formation of a multipolar world order where sides are being chosen. Countries like Argentina, they are siding with the West, relying more on the US to rebuild, while Russia and China are now consolidating their economies together. Their bilateral trade alone has surpassed an incredible $200 billion ahead of schedule. Then we saw the weaponization of literally everything. America tried to make Moscow submit using the US dollar. OPEC tried to jack oil prices higher with production cuts. Even the Houthis managed to weaponize the Red Sea, disrupting global supply chains. Going to 2024, realize that nothing is off the table in this economic war. Whatever you can think could manifest and will likely exceed your wildest imaginations. On the financial front, we are seeing a global economy starting to collapse, but somehow America is still going strong. We are going to dissect all this because the markets are still being priced for perfection. The S&P 500 is knocking on the door of an all-time high. Things are looking fantastic this Christmas season, but history tells us that something nasty always happens when the Federal Reserve starts cutting interest rates. Plus, the US deficits are still a horrible mess as well. All these aren't good signs for the world. So let's talk about 5 economic earthquakes that are starting to build. And these 5 events have the ability to reset the world order and change the entire global economy. And let's start with BRICS, or should I start calling them the BRICS Plus now? In 2024, BRICS bloc is going to expand with 5 new members. But wait a minute, I sense the confusion in you. Shouldn't it be 6 new members? And according to this list, the new entrants should include Saudi Arabia, Iran, Egypt, Ethiopia, Argentina, and the UAE. They should all be joining. Collectively, this new bloc should represent almost 30% of the global economy. But I have bad news, or maybe good news depending on you, that Argentina is dropping out. Ever since the new president Javier Milei got elected, Argentina is now fully in the US camp. His top diplomat has confirmed that entering the bloc in 2024 won't happen. So don't be shocked when it's only the BRICS 10 because Argentina has left the building. But it's easy to tell that the rest of the members, especially the ones in the Middle East, they will be joining BRICS. There can be no doubt now, we can almost guarantee it because of the war in Israel. Because America's refusing to grant a ceasefire, the entire Middle East is outraged. There have been boycotts on US brands, the Houthis are going after ships in the Red Sea, and many have put their ambassadors out of Israel as well. In contrast, China hosted the Arab Summit with Saudi Arabia and the Muslim world to call for a ceasefire. Then we also have Putin making a rare trip to visit the UAE and MBS in Saudi Arabia. All this points to a growing relationship between the Gulf nations and BRICS. Welcoming countries like Iran, the UAE and Saudi Arabia into the bloc allows BRICS to grow even further. Not only will they have control over the production of energy, their economies are poised to grow even faster than the West. If we look at a GDP comparison between the G7 and the BRICS, the West is richer than the bloc. The G7 has 46 trillion in GDP, while BRICS only has 31 trillion. But consider this one fact. Many of the BRICS nations, including India and China, they have a middle class that's growing fast. If we use purchasing power parity, which is a better measure, the BRICS nations are already ahead, well ahead of the G7. Their GDP has long surpassed the West since 2020, and this gap will continue to grow wider and wider. So BRICS is going to be a powerful economic bloc that controls not just oil, but global demand as well. And in 2024, we will likely see the group coordinate closer with each other, especially in trade. This will mean more self-sufficiency and, more importantly, immunity from any economic sanctions from the West, expect more bilateral trade, and maybe a free trade agreement amongst the members. And the next earthquake will be Ukraine's funding drying up. Now, money wins wars, and it's quite likely that no more funding might be given to Zelensky anymore. Now, I'm not saying that he'll get nothing, but the big money era is probably over. The US is getting sick and tired of this. Since the start of the war, more than $75 billion in cash and equipment has gone directly to Ukraine. This is a boatload of money that has yielded little results. However, Putin, he's amping up the ante even further. This is like a game of poker, and Russia has placed $157 billion into the pot to continue fighting Ukraine, while the $50 billion from Europe and $60 billion from the US, they have all stalled. How long can the West continue this battle of financial attrition? That is the big question, because if they can't, then it's a wrap in 2024. Let's look at the financial realities on the ground. Russian revenues have been closely tracking the price of oil. Moscow's revenues are not collapsing at all, and this means they earn more when crude price is high and they earn less when the price drops. The sanctions are not really working. The $60 price cap isn't effective. Russia can still fund the war because countries like India and China, they won't stop buying Russian crude. But in Washington, it will be delayed for quite a bit. Congress is heading home for the holidays without passing the funding. There's a deadlock and the border policy still isn't resolved yet. And here's the issue. On January 19 next year, Congress will be facing another shutdown crisis. They'll be running out of money to fund the government again. And if this collides with the Ukraine aid, the funding, it's obvious that priority will be given to keeping the US economy running and not Ukraine. However, aid to Ukraine might be coming from the EU. Hungary's Orban just admitted that the Eurozone can indeed still give Ukraine aid. Individual states like Germany and France can continue to funnel money to Ukraine without Orban's approval. So we shouldn't hold our breath that the conflict will suddenly end as well. Even if America halts their funding, Europe will likely double down and continue funding Zelensky. On one hand is the sunk cost fallacy, but on the other hand, Europe still has a ton of money to give Ukraine, but it requires them to cross the economic red line, the Rubicon, and that is the confiscation of Russian reserves. And this is our third bombshell that might actually happen in 2024. If you thought de-dollarization was bad this year, things could escalate to new heights soon. The Biden administration is signaling new support for seizing $300 billion in Russian central bank assets for Ukraine. This will be a watershed moment that we have been talking about for months. The West can't keep funding Ukraine forever. Selling an endless amount of bonds only adds to the debt burden while keeping borrowing costs high for the real economy. So from their perspective, using Russian reserves is a very attractive proposition. $300 billion is a lot of money. And if they seize everything, they can keep the fight going for many more years to come. However, there will be two big blowbacks that we need to watch. Firstly, there's no doubt that de-dollarization will happen. There's a reason why central bank gold buying has been ramping up since the start of the dollar sanctions. Over the last 20 months, the vast majority saw central banks loading up on gold. Sure, it doesn't pay any dividends, but it does have one clear advantage over the other instruments like US Treasury bonds, and that is the absence of counterparty risk. Countries like China are buying gold to bring them back home. The gold bars are being kept in a vault away from Western banks. This buying is happening even though interest rates and gold prices are at record highs. If the West pulls that stunt, we'll see gold buying accelerate as the ultimate safety trade. But beyond gold, we'll also likely see Russia start to shift their commodity trade away from Western currencies. It doesn't matter if it's dollars or the euros, they don't want to hold either. China's yuan has officially replaced the US dollar as the most traded currency in Russia. This happened back in March 2023, and the gap is starting to grow wider and wider as Russia sells more commodities in the Chinese currency. And as this move continues, more yuan reserves will pile up. This will force Russia to buy more gold as a reserve asset. So all roads are pointing to a bullish gold price in 2024, especially if the West confiscates Russia's reserves. Unless a recession comes next year, things are looking rather good for gold. As speaking about the dollar, we can expect China to continue hammering away at the reserve currency. At this point, it's undeniable that Beijing is moving away from the dollar. This is evident when we look at their US Treasury holdings. Believe it or not, China once held over $1 trillion in US bonds, but they have been selling more month after month. Over the last year, their holdings have dropped by $108 billion. That is not a small amount, and in 2024, it's probably going to get much worse. China will continue to move away but also influence the rest of the world to break away as well. And they're beginning to find willing takers in the Middle East. From Bloomberg, China and Saudi Arabia signs currency swap worth $7 billion. Beijing is trying to get the Saudis and the Middle East to trade in the local currency. Firstly, it'll start with non-oil trade. China's already the biggest trading partner of Saudi Arabia and the UAE. So it's not a stretch to see more yuan swap lines being given to the Gulf nations going forward. Global central banks are starting to use more of these currency swaps to get Chinese yuan. The Ukraine conflict and the dollar sanctions have sped things up. And this is one trend that will continue because the US dollar is getting really expensive to acquire as interest rates continue to stay high. Plus, the Middle East will want to diversify away from just one central currency. And here's the $1 trillion question. Will the Middle East, will Saudi Arabia eventually price their oil in the Chinese yuan? In fact, anything outside of the dollar will change the dynamics going forward. We know the United Emirates sold 1 million barrels of oil to India for rupees. This is already a bad sign for the USD. But if the Saudis does the same with the yuan, then the jig is up for the petrodollar. Remember that dollar dominance relies on global commodities and trade priced in the reserve currency. The bond market is just a derivative of this use. If the Saudis start selling oil away from dollars, this will flip the equation on its head. And will this happen in 2024? It very well could, right? If the Middle East continues to implode and the Gaza situation worsens, then all bets are off. And let's shift gears a bit and talk about the markets. Everyone's convinced today that a recession is impossible. There won't be a hard landing or even a soft landing. We'll have no landing and the rocket is going all the way to the moon. And you can't really blame them. The S&P has gone from 3,900 to over 4,700 near all-time highs. The last 8 months in a row returned positive gains. But I want us to think a little deeper about the coming rate cuts from the Federal Reserve. If Q3 GDP came in at 4.9% and unemployment is at 3.7%, why cut interest rates now when the economy is doing so well? There must be something that concerns Powell to cut rates at least 3 times next year. So let's outline the big risks that could see a big correction coming by Q1 next year and maybe even a recession. Now, firstly, something big is happening in the US bond market. We know the supply side story, right? The US government is still borrowing a ton of money with the national debt about to hit $34 trillion. So Yellen is still selling a ton of bonds, flooding the market with supply. However, the yield on a 10-year treasury has been collapsing since October. It has gone from 5% to 3.9% today, and this isn't really a good sign for the global economy. Now, this shows us two things. Investors are betting that interest rates, especially on the long end, are going to collapse. They are betting that the Federal Reserve will be cutting rates aggressively, so they are locking in higher rates now. They are locking in their returns. But it is also a warning signal that investors would rather throw their money to something that yields only 4% at best for the next 10 years instead of stocks. Sounds like recession fears are starting to build. Now, the rate cuts today are preventive action. The Federal Reserve is trying to reverse the momentum of high interest rates to prevent a recession. The markets are also overvalued today. We know that eventually higher asset prices will happen, right? Asset prices will move higher. 20 to 30 years down the road, the S&P will be higher. The price of gold will be higher as well, simply because of inflation. However, there's so much exuberance that the US stock market appears to be overvalued by 51% today. The market cap is way above corporate earnings. In other words, to bring things back to a rational place, the S&P would have to drop by 34%. Now, I'm not saying that it will, just understand that stock prices are rising much faster than what earnings can justify. The markets are priced for perfection, so we must watch two things that can break the narrative. Firstly, will the Federal Reserve cut interest rates on time? Everyone is pricing in a rainbow scenario of at least one cut happening in March next year. We can see the market already pricing in a rate cut by the end of Q1 next year at the very latest. If for whatever reason this doesn't manifest, it doesn't happen, we could see valuations have a nasty correction down. Next is corporate earnings. There's a big disconnect between equity prices and corporate earnings now. Corporate earnings outlook today is at $246 for 2024, the same estimate as back in May this year. But notice the price of the S&P 500. It is higher by 500 points today than back in May. The markets are overpriced today, so earnings must hit at least $246 or higher to justify the bigger valuations. The two big dominoes to watch in 2024 are the timings of the rate cuts and corporate earnings. If both of these miss expectations, we might be in for a nasty correction down. There's going to be a lot of uncertainty going to 2024. Two wars are still raging on. The markets are still overpriced and Europe might just cross the Rubicon. But a few things will be certain. The West and the Global South will continue to split apart, and the biggest beneficiary of this chaos will be gold. And when there's a breakdown in trust, people and central banks, they all run towards the precious metal gold. Secondly, if a recession hits in 2024, the Federal Reserve will make a faster U-turn and they'll slam interest rates down. They have 5.5% worth of interest rates to maneuver around, and the next rise up in asset prices could be legendary. There's a lot of money waiting on the sidelines that will just boggle your mind. As it stands, there's nearly $6 trillion sitting in money market funds. It's money earning risk-free interest, just waiting for a reason to explode out. So the volume of dollars and money is starting to grow. The pressure of liquidity is starting to build, and that's why it's never a good idea to exit completely. We have no idea how long deficit spending will continue and where the money from the sidelines will rush to. If a recession happens and the money rushes to bonds, then the markets will collapse. But if it rushes into stocks because of a soft landing or no landing at all, we could see the S&P reach all-time highs, new time highs. So you want to be prepared for either scenario because no one can predict the future. I'm not clairvoyant and there are no set rules or precedents we can refer to going forward. Nothing makes sense anymore, so the best move in 2024 is to diversify, diversify, and diversify. And I want to wish everyone here a Merry Christmas and to have an awesome holiday ahead. We'll still be posting a few videos going to 2024, and I hope you enjoyed this recap. Next year will be even crazier.